What's going on, everybody? It's Jeff here. Welcome back to the channel. Entire market popped right at the open and slowly sold off. I was expecting this all week, as I've been mentioning in my videos, as investors are awaiting the consumer price index numbers to be released at 8:30 a.m. Eastern time tomorrow. It's going to give a good idea on how much more inflation has already ran. Now, we know that Jerome Powell has finally admitted that inflation is not going to be transitory. But next week, the Fed is expected to announce how much they're actually going to taper. So in this video, I want to break everything down for you so you can better prepare for the market for tomorrow and the next entire week, and a couple weeks ahead for the end of the year. So let's get right into it. First off, as you can see, the entire market was actually pretty flat today, except for the small caps and the tech sectors. That's one thing that's really caught my attention, that it hasn't been so much of the market selling off as it has been just the tech sector and the high growth, as well as a little bit of small caps. But you can continually see the SPY has been a little bit flat or just down a little bit, or even the Dow Jones has actually been higher as the NASDAQ and Russell are continuing to get hit. It's just a good indication that there's a rotation, but money is still staying in the market. And when money stays in the market, that is always a good sign. So let's take a look at what to expect tomorrow. These are the numbers for the CPI report. So pretty much every single report dating back to July, the actual CPI, the inflation number, has been higher than the forecast, indicating that obviously inflation is not transitory and it's just slowly getting worse. Well, you can see right here that this forecast is up a full percentage point, and investors are still weighing this, I feel like, to be in a pretty adequate stage. The market didn't take that big of a hit today, as you can see right here, at most just down 1.6%, and that was the tech sector leading it, meaning that if there is a little bit of surprise, we get up to the 7.2%, that's already pretty much priced into the market overall. But what's even more important, I was reading this article that actually came out this morning, 5 things to know before the stock market opens on Thursday, was this little segment right here. On Friday, the November CPI is expected to show a year-over-year rise, which would mark the biggest move since June of 1982. Federal Reserve officials are expected to react to the burst in inflation by announcing next week that they'll be accelerating the pullback on the massive COVID-era bond purchases. Now, they already initiated saying that they were going to slow down their asset tapering of the $15 billion, as long as it's not accelerated too large, meaning if it's $20 billion to $25 billion, I think investors will be okay for it. But like I said, this also gives us a really good opportunity to look at some stocks that, one, haven't really grown that much as the market's been accelerating, and also look at some stocks that are good companies that are just really, really sold off, okay? So a couple things I want to point out. One, the banking industry is set to really benefit from interest rates rising. Naturally, as interest rates rise, the banks will be able to collect more revenue and on their interest of loaned out capital, so long as the capital still gets loaned out. The banking industry will benefit from that. But take a look at this. And this is something that really had bothered me. I want to share with you, is that the NASDAQ has continued to make all-time highs. Here's the SPY, but this is just the QQQ, which is an ETF that trends off of NASDAQ. It's continued to make all-time highs, obviously dipping a little bit, pulling back to the 50-day and the 100-day moving average, but it's continuously made higher lows and higher highs. We did bounce off of 400 today, but that 409 is right around the corner to continue that trend. And a lot of our favorite stocks, the big guys such as Google, you look at even Microsoft, the big tech, even Tesla and Apple, they've continued to make all-time highs as well. But a huge percentage of stocks, such as some of our favorites like NEO, Palantir, are far below that all-time highs. They've actually hit their all-time highs somewhere back in that June, February, March of this year. And this little diagram, I should say, shows a really, really interesting study. So the 50-day moving average and the 200-day moving average are two indicators that I look at very closely, and they're weighed very heavily by other investors. And look at the amount of stocks that are above the moving average. Only 30% of stocks in the entire NASDAQ composite are above the 50-day moving average, and only 44% are above the 200-day moving average. And that also goes intact with Google, Microsoft, Facebook, Tesla, and Apple really carrying the entire sector higher. But this gives us a good opportunity to be able to look at stocks that have solid companies when that high growth, sector starts to run again. So I'm not really at the point yet where I'm ready to dollar cost average into some of these stocks. But like I said, it's going to give us a good indication for rotation when it eventually happens. If you've been watching the channel for a long period of time, I always mention that the market runs in cycles. You have your small caps. We recently had, low floats that were running hard over Thanksgiving, as well as, low float IPOs that have been hot for a little bit period of time. And just like back I mentioned in early this year, it was the high growth sector. That's going to happen again. Small caps have also been hit really, really hard. I've mentioned that numerous times. You look at IWM, which is the ETF that trends off of it. It's only a matter of time before this sector runs again. As long as it can stay above that 210 support, we did cycle a little bit around 215. Now we're seeing some resistance off the 50-day moving average. But just pay attention to these cycles. Anytime you see something run up like these small caps did for a little bit around this time period of early November, that's when you want to stay away from them and look for the sectors that are beaten down just a little bit. So keep that in mind going forward. Now, I do expect tomorrow morning, the market to be just a little bit slow with the volume until we get those numbers. Let it digest before you decide to get into any other positions. And if the market responds accordingly, basically stating that, the forecast or the actual isn't too far away from the forecast, and that the Fed isn't going to shake up anything and accelerate it too quickly, then you've got a bunch of stocks, especially in the tech sector, that have all sold off. You'll be able to get those 5, 10, 15% gains in the matter of just a couple weeks. We still have not had any sort of Santa rally, so I'm expecting a little bit of a surge going on to the start of the year. So we'll see how it opens up, guys. But that's it for this video. I'll see you in the next one.